Hi, I'm Gonçalo Machado, one of the investment managers here at InvestEngine. Welcome to our weekly market update, which is your quick look at what's been moving markets this week. We've had a mixed week for markets, with the UK and Europe finishing broadly flat, whilst over in the US, we've retreated from all-time highs. The main news this week came out of the US, where we got another key report on inflation. We've also seen a number of Federal Reserve members speak, with particular attention to Jerome Powell, where he spoke on the US outlook. Following the first interest rate drop this year, we saw core PCE, which is the Personal Consumption Expenditure Price Index, get released. This is the Fed's preferred measure of inflation, which came in at 2.7%. This is up from 2.6% last month, but it's still in line with market expectations. So far, market reaction has been fairly muted. On Tuesday, we saw the chairman of the Fed warning of a challenging trade-off where inflation risks are tilted upwards on the back of the tariffs and other factors, whilst labor conditions are weakening. He called the recent rate cut a cautious risk management move, not the full start of an easing cycle, but he also emphasized of a data-driven approach. This week, we saw US GDP get revised upwards to 2.8% on the back of strong consumer spending. This is the fastest second quarter growth in nearly 2 years. We also saw the jobless claims numbers come in below expectations, which is positive news. Over in the UK, Germany and France, we saw manufacturing data come in line with expectations, with both markets having muted action on the back of the news. As always, if you have any questions or something you need to be covered, we'd like to help you. You can drop it in the comments. Always happy to help. And don't forget to check out our blog, sign up for the newsletter, and follow us on YouTube and socials for more updates. Thank you.